Contrary to what the Dow futures are doing, the Asian markets are still relatively positive.
On Friday, you've got the S&P 500, which ended about 0.65% higher. Nasdaq was up 0.8.
But importantly, it's the restructuring, value unlocking and fundraising.
It's been a terrible, terrible last 1 week. 16 points lower, absolutely flat now on the Nifty.
So we do have a similar kind of a construct wherein we do think that larger companies have a far greater risk reward.
There's a high-level government committee that came in. They're recommending that, Chinese firms now could start bidding for these government contracts.
Very advanced stage of issuing the NOC for NSE IPO.
Because gold is now trading at $4,600 an ounce. We have seen prices gain up by 4% in the previous week.
If the market sustains here, these guys will have to cover their positions. That will cause an accelerated decline.
Well, it is turning out to be a Monday where we are seeing pressured markets on our hands.
Both sides continue to actively engage. In fact, the next call on trade will occur tomorrow.
It is now trading in positive territory. At one point, it also made an intraday high of 25,740.
Well, that was the day so far. Hello and welcome to Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. And during the course of the show, some of our co-anchors as well will be joining in. Hey, Mangalam, who would have thought, right? The markets are looking for a bit of a trigger, and they got it midway through the trading session. Green is the color, but a couple of hours back, well, it was only red on the screen.
It was maroon on the screen, Nigel, if one could say that. But, all the data points were so much towards an extreme that it just needed one trigger for the market to move the way it did. And at one point, we went below the 100-day moving average. The put-call ratio moved to 0.6. We've been talking about how the FII longs are at the lowest levels that we've seen all the way since mid-October. So all these factors coming together, we've seen the markets move higher. The question now is that with that, oversoldness of the market coming off, are we in to see some bigger gains here or not? Because the broader market's still under pressure. The Nifty has recovered from the lows. The mid-cap index is still in the red. And we still have about 2,000 stocks which are in the red for about 860 stocks which are in the green. Yes, those lines have come closer but haven't kissed.
Well, that's right. Now, just to give our viewers a quick update, the US ambassador to India, Sergio Gordwell, aided today's surge from the oversold levels. The Nifty, well, that currently has moved above that 100 DMA, protected that 100 DMA. And the Nifty Bank, more importantly, that's actually been the, the heavy lifter in this entire run that we have seen. That as well is trading mildly above that 20 DMA. So that's the important mark out there. The Nifty needs to defend that 100 DMA after breaching it intraday. And the Nifty Bank needs to defend that 20 DMA, which it also breached on the intraday basis. The PCR, as Mangalam said, it had gone down all the way to around 0.63, 0.62 as well. And then from there, in fact, it surged. Now it's at around 0.86 the last time I checked. Technically, the Nifty is still very much skittish. But the FI short positions could actually be a blessing disguise, provide some kind of cushion to see a bit of a bounce. So if we give you a range, well, on the downside, the recent low, little below the 25,500 mark, that becomes the important mark on the downside, just in the near term. And on the upside, you have the 50 DMA, the 20 DMA, you have the options data as well. All of them are pointing to the 26,000 odd mark being a bit of a resistance zone. So 500-point range, let's see which way it'll swing. But with the FIs being net short and with the PCR at the lower end of the range, at the start of today's trading session, from around 25,500, well, you would bet the Nifty to head more towards the 26,000 mark rather than head towards the 25,000 odd mark, Mangalam.
Take that point, Nigel. The risk reward was firmly in favor of a long if the panic was taken care of. For a brief period, the market did break that 25,500 mark as well, but thereafter it sustained above those levels and we saw the indices move higher. What's leading the rally right now? We are seeing some traction on the banks. A lot of these FMCG names are seeing some purchase as well. So HUL should come up for you, currently at the high point. In fact, the FMCG index by itself should, tell you how it's moved higher. We have Godrej Consumer from the broader markets as well doing well, but none a bigger contributor than Reliance. Just pull up the intraday chart of Reliance as well. Reliance was under pressure and the market was not doing particularly well. There was a fair amount of panic, and now from those lows, there's been a big move. Reliance is back in the green at the high point of trade, and that's reflecting in the kind of moves that we're seeing in the frontline index. But it is the story that came in from, the US ambassador in a shot of optimism for the market, which saw it recover from the day's low. The newly appointed US ambassador to India, Sergio Gore, said that the next call on the India-US trade will take place as early as tomorrow. Now, remember, a call does not entail a trade deal has happened, but it's a step in the right direction. With the market being oversold, the street took the positive out of that comment, and as a result of which the up move is what we saw. Let's hear out what he had to say, and then we discuss this further.
The United States and India are bound not just by shared interest, but by a relationship anchored at the highest levels. Real friends can disagree, but always resolve their differences in the end. Last week, our great Secretary of State, Marco Rubio, powerfully stated that this year will be a year of reciprocity. We are raising the standard for diplomacy itself. That means fair trade, mutual respect, and shared security. Many of you have asked me for an update on the ongoing trade deal negotiations. Both sides continue to actively engage. In fact, the next call on trade will occur tomorrow. Remember, India is the world's largest nation, so it's not an easy task to get this across the finish line, but we are determined to get there.
Well, the market chose to look at Sergio Gore's comments with optimism that maybe something's in the works. But as Manglam said, a call is fixed. Doesn't mean we're going on a date, but there's a hope, right? There's a chance in there.
There's a hope, and his name itself, Nigel, is Sergio. So obviously the market should surge. Let's say that. But, that's on a lighter note. But let's take this conversation forward. We do have Sanjay Parekh with us.
Well, that's right. Let's welcome Sanjay Parekh, founder and CIO at Soham Asset Managers, who joins us on the show. Hi, Sanjay. Well, it was getting a little too tricky, right? I mean, last few trading sessions, we were down. Today, in the first 10 minutes itself, we were down close to 100 points in the Nifty, and plenty of stocks had already lost 4-5%. I was wondering what was going on. And when Manglam and myself were on at around 10:30 a.m., we were saying, where is the fresh negative trigger? Luckily, Sergio came to the rescue. And in fact, we did see the markets at least bounce in the near term from oversold levels. What is your take on the markets? We entered this year with plenty of optimism. We have started off a little bit softish. But do you think ultimately things will fall in place and this will be a far better year?
So the framework we have is, we go with the earnings of this year. Again, we're going to have weak numbers. There are minor downgrades after the preview. This quarter also, unfortunately, has been, from previews that we see is more like 7-8% top line growth for Nifty, EBITDA growth of 4-5%, and profit growth of 3-4%. Now that clearly doesn't augur well, because we were looking at some recovery, maybe not more like 10, 12, 13%, and then Q4 looking far better. But, we still can wait, and because, November, December, some of the economic indicators have turned positive. So fourth quarter, fourth quarter outlook will be important. We'll again, benefits of lower interest rates and all could percolate in the fourth quarter. And that is where we hope, because earnings recovery will be the major catalyst for the market movements upwards.
I take that point entirely. When we did that survey from a lot of the market intelligence here at the start of this year, everyone was given options as to which will be the biggest trigger for the market this year. And obviously, while in commentary, it was the US trade deal, etc. But when we asked them to put pen to paper, 66%, more than 60% of them, actually closer to 70%, said earnings will be the trigger for the market going forward. So far, from the updates that we've got, you said that it's going to be a 7 to 8% top line, Q4 looking like a better quarter than Q3. What sectors do you believe will lead earnings from here on? Because from the updates that we've gotten, FMCG, it's showing improvement, but not so much. Banks, yeah, there are signs of improvement, but not a big surge. On the other hand, metals, they look like they're on a cyclical uptrend. So would you bet on commodities to lead the earnings or the traditional ones?
I just broadly cover from the preview that we've seen. There are no major positive surprise. Some of it is known. So starting banks, we know that NII growth will be under pressure because of the repo rate cuts. Diversified financial in the Nifty mainly is Bajaj Finance, where it's in line with a little overgrowth, but in line. Coming to discretionary auto, ex of Tata Motor, quarter on quarter there will be a recovery. Cement, quarter on quarter there will be a lower EBITDA per ton because realizations have been weak, And year on year they look okay because last year third quarter was weak, but nothing exciting in cement. Utilities also will be more like flattish. Pharma, because the high base of remdesivir, this certainly doesn't look great. So what will look better is ferrous will certainly be an okay quarter, but the outlook for fourth quarter in ferrous will be good because the price have increased. Non-ferrous will certainly do well, and the outlook for non-ferrous will be very, very good ahead. And then capital goods should be broadly, the larger cap, Larsen looks fine, with better numbers. Staples will be still weak. IT will be 6-7% growth. So that's why the overall growth is still quite tepid.
All right, Sanjay, since we're talking about the ones where you're overweight on, and I've always told you, that kudos to that gutsy call you had on the non-ferrous, namely stocks like Vedanta, that you played, and they've given you good returns. But the other, sector that was not really consensus, or if I compare the weightages that you have in your portfolio, which compares with the benchmark, is capital goods. Out there as well, I think you're still overweight. Yes. There is this talk about some kind of slowdown, capex spend as well slowing down, but there is some optimism that maybe private capex is actually picking up. How are you placed on this theme? L&T is one of your big holdings. I think Interac is another one. Dilip Bilkon is another stock that you have in there. You continue to hold that optimistic stance on the capital goods space?
Yeah, I think all of them. I think, see, for the government to recover the economy, even in the budget, they have to be progressive on capex. What was missing was the state government capex, which was diverted to all the popular schemes, and that did affect, the growth of maybe order books or delays in execution or payments not coming on time. But the opportunity is pretty large. And at least we believe very strongly that bottom-up, Larsen is, of course, the large conglomerate, but the rest of them on a bottom-up basis, there will be opportunities. And some of them are at very, very deep value, So we are positive on a bottom-up basis. We will look for them where there is valuation comfort, and we will increase our exposure. So we increase our exposure in the transformer segment recently. Interac has been an old holding we've been holding. Dilip Bilkon is not work, but serious deep value. And Larsen and Toubro, it's worked very well for us, and we continue to hold on. We are positive on this theme.
And transformers and rectifiers, right? You're talking about transformers. That's another stock that you'll had. Still intact?
Yeah, after this fall, because they had a very bad Q2, so there was a very steep fall. And we thought that, there clearly have capabilities in the higher KV segment of 765 and eventually even HVDC, where they are only multinationals. So the capability of the company is phenomenal. Of course, the Q2, the way, in terms of the way they maybe guided the street and delivered badly, the stock really got hammered. And this we thought was a good opportunity, and hence we slowly were nibbling in it. And Q3 has been good, and the outlook for Q4 and ahead is definitely good. Overall, the demand supply in this space is clearly in favor of, the producers.
Okay.
And we don't see a threat from Chinese in this segment. We don't see that.
All right, Sanjay, I'm going to request you to stay with us. Good to hear that, in fact, you'll continue to nibble on into a stock that's actually fallen, transformers and rectifiers, and you're giving us good rationale for that. Request you to stay with us. We'll slip into a short break. On the other side, we'll continue the conversation with Sanjay. And to give him company, we'll also be joined by Rahul Sharma of JM Financial. He'll help us out with how the technicals and how some of those key data points are shaping up. Don't go anywhere.
Welcome back. The market continues to hold with a gain of 50 points on the frontline index. The Nifty just about 20 points away from the highs of today's trading session, holding on to those levels. A lot of stocks from the broader markets are doing a lot better right now, even as the advanced decline is firmly in favor of decliners. Look at Dredging Corp, 8% surge out there and decent volumes backing it. Over 1.5 times what we've usually seen on this stock. The other one is GMR Power. That too has seen a sharp surge, up almost, 6.5%. And here too, the volumes are nearly 3 times what we've seen on an average day for GMR Power. So dredging is up 8%, GMR Power up 6.5%. Don't lose sight of Force Motors as well. One of the stocks of 2025 and driving in 2026 in good style as well. Big, mover out here. Very close to the 20,000 mark on that stock too. 6% higher.
Well, that's right. One more stock, Mangalam, Methane Alloys. NSE could probably be listing sooner rather than later. They have a large chunk of shares in NSE. I think more than 10 lakh shares, I think this is what they have in NSE.
Oh.
So explains why that stock is up 13%. But the core business is something that you should be focusing on as well. But it's become more like an investment company because of the kind of holding, the kind of cash as well that they've had.
Question then will be, once NSE comes out with an IPO,
at
what point do they, unlock value? We've seen these stories, Nigel, in the past as well. But, whether NSE's listing impacts Methane Alloys or not, has definitely caused a lot of happiness to BSE on one side because the NSE IPO approval has come by, or rather, the possibility of an approval coming by has happened. And secondly, the SEBI chair himself has said that, there won't be any major change to the derivatives environment right now. The street was worried about that. And the BSE shareholders are heaving a sigh of relief with a 4% up move in an otherwise wobbly market. Metal stocks continue to do well.
Well, that's right, Mangalam. That was the stock of the day that we gave earlier this morning on our Bazaar chat as well, because of those two reasons itself. Because of SEBI chairman's comments on NSE, as well as no risk probably in the near term to the derivative trading out there. We're talking about BSE right now. Let's welcome Rahul Sharma, Director and Head Technical and Derivatives, JM Financial Services, who joins us on the show. Hi, Rahul. Good afternoon. Good to see you in, and thanks for joining in. Well, when we had told our team, that I said I wanted Rahul on the show because you give us some interesting data points, particularly from oversold levels. But Mr. Sergio had a plan of his own. He made a couple of comments out there which the bulls liked. Given that we've seen a bit of a bounce from the lows that we saw literally of sub 25,500, tell me what's the level you're looking at from here on? Do you think this rally can extend to the upside, maybe get to around the 20-day MA? Or do you think it's a bounce that in fact you look to short into?
See, there are two things to it. We've gone from being extremely overbought on previous Monday. The put call ratio hit a 1-year high on the previous Monday, and this Monday we were at the lowest point in the last 1 year. And coupled with that, we have this reason of the US ambassador coming on air and giving a positive view, at least uplifts the sentiment. So bounce back has definitely started. 25,500 panic low we saw in the Nifty. India VIX, which has shot up by 26% in the last 3 days, seems to be done its bid, at least for the short term. And what we are seeing in terms of sectoral participation is you have metals, which is leading the market, no cause of concern in this space. And you have banks which are not falling. So the bank Nifty index is still above its 50-day EMA, whereas the Nifty went below the 100-day EMA. You have PSU banks which are even stronger, trading above or rather close to the 20-day EMA. So essentially, these are the pockets of the market which are keeping the Nifty afloat. And this bounce back could very well head towards the 26,000 mark. We still have lots of shorts in the system, not only from a long short ratio perspective, which has always been below 10 since many weeks now, but now the absolute number of shorts as of Friday were close to 1.9 lakh contracts, which brings to the table that after this statement and seeing today's price action, a lot of those shorts would be running for cover. So now the view is bounce back until 26,000, and post that happens, take a review and see if there is more fuel left into the tank.
All right. So what kind of fuel are we looking at here? I mean, if you could put some numbers to that.
Yeah, so the focus post this Supreme Court outcome of the US will shift on earnings and secondly, the budget. Now, 500% tariff is more of a headline risk than an absolute threat. What essentially the market would be looking on is there any increment in the earnings numbers? And secondly, sectors like infra, sectors like banks and defense would be the ones could be preparing themselves for a pre-budget rally. So I think the best way to approach this market is start with large caps first. Possibly some bit of volatility maybe there around the 26,000 mark. But once Nifty has sort of stabilized above 26,000, I think then we could very well see these pre-budget names sort of, really taking their own. So be selective, start with the index first, and then probably move on to these sectors. Something very actionable at this point in time. One is the biggest dragger of the Nifty, Reliance, is not bearish anymore, at least in today's session. The stock is looking for a recovery until 1550 on the upside. Then you have another telecom major, Bharti Airtel, seems to have formed a bottom today. So these are two stocks from the telecom space, looking pretty solid on the charts. Okay. And at the same time, you have a banking index, which is relatively outperforming the market even in this correction. So these are the key, some of the pockets of the market where focus can be drawn, and essentially, take this right now as a bounce back. Once 26,000 gets navigated, further clarity is expected to emerge.
All right, Rahul. So 26,000 on the cards for the Nifty. You'll be tilting more towards that. Focus shifts to budget as well as, the earnings. And you like sectors like banks, infra, as well as defense. And the two stocks that you've named is Reliance Industries as well as Bharti Airtel. Rahul, I know your love for two-wheelers as well as four-wheelers, and for the circuit as well. I believe you were doing some racing over this holiday. But the sector that you like is not autos. The top sectors, I believe, metals, you're saying, right that. And from the banking pack, PSUs is what you like. Could you tell us a little bit more?
Yeah, absolutely. Timing is everything, whether it is technicals or whether it is, these autos. The point is, go with strength first. They are the ones which have been the least hit. And there is, a good enough reason for them to rally once the market stabilizes from here.
Right. Didn't know that you were a biker, Rahul. Interesting one out there. So next time we'll not only talk to you about the charts, we'll ask you about, some of these trails as well. Though in my defense, I don't know how to ride a geared bike, but maybe one of these days.
Even Rahul likes the four-wheelers as well. I think he did. You did a drive on the circuit, I believe, right? Is that correct?
What circuit is this?
Yes, absolutely. So this was a small one, but quite an interesting one as well.
All right, interesting. Right now, the only circuit that the street wants is the upper circuit on the market. But, be that as it may, let's wrap this with Sanjay, the last word. Sanjay, you did speak about the sectors you like. You did speak about, all the things that can outperform from here on, or you're betting on. One state conspicuous by its absence was any of these consumption themes, be it autos, be it consumer discretionary, staples, retail. And especially at a time when the last 7 or 8 months, the government's tried to do everything it can to revive consumption. And then you have, the 8th pay commission coming as well.
Yes. So we are positioned on discretionary side on autos, and it's worked well for us. But, now they're not cheap. Maruti has moved up quite well. So while we are holding it, but we think near term, I think they're done for the time being. I said for a core holding, we will not tinker with them, but they're not cheap anymore now. So M&M and Maruti we own, and it's worked well for us. And we will continue to own. On the other piece of consumer staples, we still feel growth is quite weak. And, the moat in each of them is really getting attacked from multiple sources. And valuations are still not okay. So we would want to play consumption through, maybe financials, telecom, NBFCs, discretionary auto, where we feel at least, you have more clarity on growth and reasonable valuation.
Okay. Got it, Sanjay. Thanks a lot. I think Mangalam will be going through a lot of those FMCG names and their results and trying to dissect them. Maybe, in fact, one of those staple companies could come on your radar. For the time being, you're saying stay away from staples. You find plenty of other better opportunities in the market. Thanks a lot for joining in, Sanjay, as well as Rahul. Wishing you all a good remainder of the day. But we'll slip into a short break. On the other side, Mehboob Irani is waiting for us. We'll discuss some of the top stocks that are on the news. Normally, we start closing bell at this hour, but we started half an hour early because of the kind of volatility that we saw in the markets. Nifty was down close to 200 points. And now, as we speak, we're up around 50 points or thereabouts. Sergio Gore's comments clearly, giving the bulls something to hope about. He's saying that, yes, they could discuss the trade deal, could discuss it. Not just going to have a chat with that. But the street is optimistic that there will be some kind of outcome. Well, let's find out first, how do you position yourself in the final hour of trade? Mitesh Thakkar is back with us. Mitesh, if you went ahead and bought at lower levels, I think today you were suggesting to buy at around 25,400 or thereabouts. I think we went down to around 25,480. And from there, we did see a good bounce. What do you think? Enough gas in the steam to push us higher? Or would you take some profits if you bought earlier today?
So, Nigel, we didn't buy because, as I said, we were waiting for lower levels. So we have some options positions on the bullish side in the Nifty, have some call options because we didn't kind of hit the lower level. So futures position did not get initiated. But I think it looks like, market which has fallen vertically is trying to bounce back a little bit from oversold levels. My sense still is that, it will be very difficult for this index in the short term to get past 25,950, 26,000 zone. So let's say if you bought anywhere close to about 25,500, 530 zones also, then I think just take some profits and trail your stop losses to about 25,630. I think on the upside, as you get closer to about 25,900, traders should be looking to exit long positions and then see if, there's weakness and we can reinitiate on the positions on the short side.
Got it. Okay. All right. So not sounding very optimistic that we can get past the 2050 DMA band, which is ballpark around 26,000 odd. Mitesh, give us a couple of trading calls though, because stocks are doing a thing of their own.
Yeah, they're good. A lot of stocks have reversed. The first one is Asian Paints from the buy side. Keep your stop below 28.54. Look for targets of 29.40. And HAL is a buy with a stop at 44.79 for targets of around 4,600.
Okay, all right. Thanks a lot for that, Mitesh. Well, good time to welcome Prashant as well. He's in. Mangalam's taking a bit of a break. And Rima will join us in a bit, I'm guessing. Hey, Prashant, green Rima, on the screen.
Rima's already at TCS.
Oh, she's already there.
I think. I don't know. But anyway, TCS later today will be interesting. Nigel, I mean, it's interesting. Markets have rebounded quite nicely. And of course, the Sergio Gore comments are helping.
Yeah.
But the one name we track, Gokuldas, which is the indicator, that is down 5.5%. There is no recovery in that one. So I kind of wonder whether, of course, I mean, I think those Gore comments were the trigger and the market took off vertically. But, you would have seen this one sort of come up. We should put up Gokuldas, basically, is what I'm talking about. You should have seen some interest, some comeback here. So the question to ponder, to wonder is essentially this. Even without Sergio Gore comments, and maybe we would not have a vertical rally, but are we getting to levels where on a F528 basis, things are looking slightly more reasonable, etc., after the sharp fall that we've had recently across the board? Opinion, of course, is divided. There are many seasoned investors who believe maybe a little bit more is required and prices need to grow into earnings, etc. But I mean, I think into valuations rather. But it's a debate which we will keep having here on the channel. Capital goods stocks is the other area. I think Hitachi's recovered from the lows. GE T&D is the other one. Transformers, CG, etc. They all actually in the morning, along with the market, were down sharply. We had IIFL Institutional Equities' Renu Baid, who told us that her industry checks indicate that a large Chinese company which has got manufacturing facilities in India will be allowed into to participate in tenders on the power transmission side. Vinny's here with details and what she's put together. Vinny, afternoon.
Hi, thank you so much for that. Yes, so firstly, let's just take a flashback in terms of what happened last week and why these stocks had fallen. Now, according to a Reuters story that came in, that Finance Ministry was planning to scrap the 5-year-old restrictions that are there on Chinese firms. These restrictions came into place in 2020 on some of the power, railway and other sensitive government contracts. Then, obviously, CNBC confirmed with some government sources as well. They said that no decision was made as yet. But before that, the stocks were beaten down already. And then, despite this notification coming in or the clarification from sources that came in that, there's no decision yet taken on this front, still the stocks were falling. Even today, we saw the stocks falling in trade. Now, Renu Baid of IIFL, what did she say? She said that no government notification is there as of now, even till date, in terms of lifting these restrictions. Channel checks are suggesting that TBEA, which is a big Chinese company, they have been approved maybe for participating in high voltage reactors. So only a specific product, maybe where they can start participating in these government contracts. She also highlighted that, even if this comes through and TBE is there and participating in this contract, she's not expecting a lot of impact in terms of the performances of our Indian companies. So not much of a worry. She doesn't expect much of a change or fluctuation in terms of pricing as well, at least in the near term. Now, apart from that, what we also had is a lot of other brokerages wrote about this. They said that the relaxation may be more segment-based with prior requirements, part that they want to participate in a government contract by these Chinese firms. It's not going to be a blanket rule that the restriction is lifted for all Chinese firms or even across the board in terms of transformers or in terms of reactors, not across a blanket rule. So maybe negative impact could come in for something like an L&T, BHEL, GE, Vernova, TND, Hitachi Energy, Siemens Energy. And that is why we've seen a bit of a fall coming in these stocks in the last 3 trading sessions. But that is something that we'll be keeping an eye out on, whether this actually comes in terms of any notification.
Okay, all right. Thanks, Vinny, for explaining that to us. Mehrbon Irani as well joins us on the show. Hi, Mehrbon. Good afternoon. Good to see you in. First time we're speaking in 2026. So wishing you a cracker of a year and look forward to interact with you as the year does progress. Give us your view on capital goods. They thought it was going well for it. Unfortunately, the last few days, they've been very, very nervous for the reasons that Vinny put on the table. After this kind of decline, would you be interested or will you stay away?
Happy New Year, Nigel. Happy New Year to all the viewers. And I hope that the New Year, though, has not started very well for the markets, hopefully will end the year on a much, much, much better note. Keep fingers crossed. As far as capital goods goes, as far as Chinese companies will be allowed and this and that and all, I think there was a report from a otherwise very respectable agency about Chinese companies, government will ease restrictions for them for bidding for government infra as well as power sector projects. I think the same evening, the government statement, in whatever format it came, they denied it. Unfortunately, many accidents are taking place off late in the markets based on such information which is floating around from respectable agencies. Many times it gets denied. Now, even I think on Friday it was Manappuram Finance, Bain Capital, RBI restrictions. Manappuram comes up with a statement. The stock comes around 310 to 278. I think all this is just not fair. When we come on television and give some recommendations here and there, we have to be very, very discreet in what we are stating because the regulator is looking at us. It's as simple as that. So why are these agencies not being questioned? It's a simple thing, I'll put it. Anyway, let me come back to the question which you asked. The report surfacing that government may ease restrictions on Chinese companies suddenly was a big negative as far as sentiment goes for virtually all capital goods stocks. Fear of renewed competition from Chinese OEMs for project orders, pressure on margins, visibility of projects going ahead, all this became a little bit of a question mark in the minds of the market, which even otherwise, the market has become very suspect of things around because people are virtually seeing blood on their portfolios for the last maybe 1 to 3 months now. So any negative news, people are extrapolating it. Now, stating that it will be only for reactors or some products here and there is a different issue. In some cases, the weak or delayed orders for the capital goods sector is also starting to happen. And I'll give a simple example. I think on Thursday last, Elecon Engineering, a company which I'm owning the shares, otherwise a good company, announced numbers which were definitely not great, but were not so bad also. And the stock was down 18%. And what was visible in those numbers was the execution problem and somewhere the feeling that they are not getting the collections or the money or the receivables on time from the companies from which they have got the orders. So this is definitely unnerving the market. And let's accept one thing, capital goods over the last 3, 4, 5 years has been one of the most preferred sectors of the market. The companies are doing well, growth is happening, the stocks somewhere are a little bit expensively valued. And with this type of news floating in the market, plus the Elecon results, which I am singling it out right now, I think a couple of reasons here and there, and you may see the stocks correcting 5-10%, and that is exactly what is happening at the moment. As far as the Chinese things goes, I personally hope that there will be a little bit more clearer clarification coming from the authorities.
Okay, all right. Got that. But Mehrbon, when you were talking about responsibility and various networks reporting this and that, you also briefly mentioned gold financiers. It could be actually a very, very good scenario for them that plays out because the world has gone into a bit of a funk and that gold price could get protected at these levels, if not go up. And the cost of borrowing could come down because, there are still some cuts that are in the works. that means the cost of borrowing could actually come down. How would you view the gold financiers? And we have namely, a few names, Manappuram, Muthoot, IFL Finance. I don't know whether you want to throw in Capri Global in there, but your view?
I am personally holding Manappuram and Muthoot, so with a clear disclosure that I'm holding them and I intend to keep on holding them. As far as my view on precious metals goes, I've been quite vocal to whoever has asked me over the last 6-7 months that I'm very bullish on silver as well as gold. Can they correct by 10, 15, 20% also? The answer is yes. Will they be higher from here? Answer is yes. The world is becoming a very dirty place. We all know geopolitical problems virtually are surfacing every now and then. There could be pressure on dollar here and there. Going ahead, certainly. So I think precious metals is a good place to be in. Now, what has that got to do with gold finance? Gold finance, I think you rightly mentioned it. And Nigel, I keep hearing you about gold finance and about metals in general. I think your comments are very direct, very straight, and very clear, and very apt. So I think Manappuram and Muthoot are, I don't know much about the other two which you mentioned, and I don't own them, but as a space, I think this should continue to do well. As far as Muthoot goes, I think the company has clearly refused to, as clearly stated that they will not go in for financing against silver ornaments. But as far as gold ornaments goes, I think they are doing gold financing goes, they're virtually doing a great job. Manappuram had its own problems, the microfinance business, and they have been working on this deal with Bain Capital from March 2025, if I'm not mistaken. Most clearances are in place. They are stating the RBI clearance will also come into place. And if all this happens, I don't see the stock not going up by at least 10-15% more from here. As I mentioned earlier, any sort of news coming here and there, there could be a sharp retreat for the stock. This happened for Manappuram, but I think this continues to be honestly a good place to be in. So Manappuram, Muthoot are in my portfolios, intend to hold it, and I would advise that people who are holding it can continue to hold it. As you rightly mentioned, this is a good space to be in.
Okay, all right, Meribun, stay with us. I want to highlight what's happening with Tejas Networks as well. It's a complete collapse. So it's not as if it's a stock which has done well, bombed out name, and further selling pressure here after second quarter. Numbers numbers from the company. Vinny is here with details. Vinny, take it away.
Hi, so numbers were not a good one this time in Q3 FY26. Year-on-year basis, the revenue was down by around 88%. The EBITDA has seen, actually it's an EBITDA loss this time of 134 crores versus an EBITDA profit. So clearly, obviously, the company is reporting a loss this time as well of 196 crores. Now, this is an indication that one, there were weak sales. There is deferment or delay in terms of the major BSNL order that impacted the top line as well. And seems like, that peak that one saw in coming for reflecting in the numbers for the execution of BSNL, that seems to be done for the company. Now, apart from that, when you look at it, the delays that has been continuing for a while and seems like it's worsened a bit as well. Fourth consecutive quarter that the company is actually reporting a loss this time. And overall, when you look at it, the cash position for the company at the end of the quarter was at 537 crores and net debt stood at around 3,349 crores and versus 3,738 crores. So obviously this is mainly a bit lowering in terms of the net debt because of the lower capital working that's come in. But all in all, not a good set of numbers, and that is why we're seeing the stock fall in trade as well.
And I'll ask Meribun about Tejas in a bit from now. But Nigel has walked across to the wall to the F&O positioning and F&O desk. Nigel, take it away. What's happening?
Well, Prashant, at the start of today, we had hired two key factors that we were looking at. One was the FI net short positions, which had reached the extreme level on the upside. And the other factor was the nifty PCR that had reached the extreme level on the downside. Now, the PCR, the last time I checked, has moved to around 0.85 from around 0.6. And when we did see that bounce post Sergio Gore's comments, well, the PCR was actually at around 0.62 odd, which, tells you that historically we have bounced from there and today was no different. However, the reason can be different each time around. Now, pull up a couple of strikes today. Some of those put buyers, they were well in the money. They were dancing away to the bank. The 25,600 put, the premium at its peak today was 145 rupees. That's come down to around 21 rupees. So now that we are seeing that there is writing, from the lows of the day, there was actually writing being seen out there. And some of those put buyers will be actually repenting that they didn't square off those positions because they were very, very well in the money. Even if you pull up the 25,700 put, The premium right now is around 42 rupees. At the peak of trade, you know what it was at? 225 rupees. So a sharp downtick is what we're seeing, but there are signs of writing at both those two strikes. So if we give you a broad range on the Nifty, it'll be around 25,500 to around 26,000. Why do I say that? The low of today is ballpark around 24,800, 25,480 or thereabouts. And on the upside, you have the 20 and the 50 DMA. That's at around the 26,000 odd mark. So yes, we're seeing a pullback in today's trading session, but it will require a bigger effort to get past the 26,000 odd mark. Individual stocks, mines, metals, they continue to remain in focus. So there are signs of fresh buying that we're seeing on Tata Steel. Big uptick is what we're seeing on the stock, and as well as open interest built up. Coal India, that's coming for a short covering bounce. After not doing much for multiple months, they have this BCCL IPO that's currently underway. It's seeing massive subscription out there. And there's hope that maybe valuations as well are pretty much in line. That one, in fact, is coming for a bit of a short covering bounce. And SAIL, I think you should keep an eye out on this stock. There was some shedding that we're seeing on this particular counter the last time I checked. And I think possibly in the next 2 to around 3 trading sessions, it could possibly come out of the F&O band. So the market's at the high point of the day. A couple of those technical parameters did get stretched, and that could be some of the reasons that we saw a bit of a bounce. Back to you, Prashant.
All right, Nigel, thanks very much for that. So that's an interesting state of play. Mehrabun Irani is with us. Mehrabun, we were talking about Tejas Networks earlier. Any thoughts on this one? Tata Group company, one of the few companies, I guess, in that segment and across where it's got very, very strong IPs, is involved in 6G. I mean, technology-wise, right up there. Share price-wise, I mean, right down there. What's the call?
Tejas always had the credibility, still has the credibility. It's ultimately a Tata Group company. Quite a few funds, I remember, was speaking very positively about it. They became the Pied Pipers and everybody else followed. There was momentum in the stock. Stock went to DC levels and people were justifying it. But they all ultimately fall and they become a victim to something called the growth which is projected, which is factored in, and ultimately what the company delivers. Look at other names also, like say a Trent, a Tata Elxsi, a Protean, Keynes, Dixon, Sterling and Wilson, Blue Jet. Look at the valuations they were commanding, and they're all fallen to earth right now. Are they bad companies? Certainly not. Are they in decent businesses? Answer is yes. But you can't be going on chasing such stocks. So Tejas was a stock which people went on chasing. And for the reasons that you rightly mentioned, telecom equipment maker, BSNL, progressing to 5G, 6G, routers, for broadband and for other things. I think it's a good company otherwise. But a year ago, when I heard the conference call, I became convinced that the numbers going ahead are not going to be good. The management went on defending itself, stating that things will improve without having a very clear explanation as to how and when the things will improve. So one fine day it will improve, but for the moment, I think the numbers are dismal, to say the least. I think with a loss of 200 crores for 3 months period, and with the turnover dropping by 80% over what it was last year, the writing is on the wall. So people who are not yet sold into it have nothing else to do but to keep on holding on to it. It's a good company. One fine day it will recover, but in the near future, honestly, I don't see it happening. So this could be a stock which will have a sharp bounce back as and when, because it's fallen so much, but there are no triggers as such possibly to go ahead and recommend the stock just because the stock is 1/3 or 1/4 of what it was, say, a year and a half ago.
Okay. All right, Mehrabun, thanks a lot for joining in. Look forward to chatting up with you soon. We appreciate you joining in. By the way, the markets from being down 200 points, a big reversal is what we're seeing. Now we're up a good 100 points with the Nifty Bank holding above the 20 DMA. Slip into a short break. You come back. Rahul Vera of Nippon India AIF is waiting for us with his commentary on the markets.
Welcome back. Just coming up to the 3 o'clock mark, let's go across to Hormuz, who's now standing by with what's moving in the broader market with volumes and with price action. Hormuz, take it away.
Boy, what a turnaround this has been in the second half of the trading session. And one name, though, that still continues to remain an underperformer is Laurus Labs. And it's been underperforming after the record year that it had in 2025. It's the third straight day of losses now for the stock. They're almost 4% lower as we speak. Profit booking now seen from record high levels. The last three sessions, the stock has declined almost 8%. And so far in the year of 2026, today's volumes are the highest that you have seen. 20 lakh shares have been traded, double the 20-day average, which is 10 lakh shares. And the stock is now trading around its 50-day moving average of 1,028. It's looking to take support at those levels and rebound from there. And the 2025 was the best year that the stock had since 2020. The stock had gone up almost 65% last year. JTL Industries is an outperformer in today's session, among the top gainers on the small cap index, almost 20% higher now, the biggest single day gain on record. Snapped a 5-day losing streak today. Volumes are the highest since December of 2023, and before today's session the stock had gained only in 5 out of the last 24 trading sessions. In today's session itself, we have had 4 crore shares that have been traded on the stock. The 20-day average is only 4.5 lakh shares, but despite this, the stock remains below its key moving averages. Now it is heading towards one major level, which is the 50-day moving average, that is at around 61.5, and the year gone by was a forgettable one for the stock. Was down almost 40% back then. It was the second straight year of negative returns. Kernex Microsystems is another name that's not doing well today. It's 9% lower, the biggest single day fall since April of last year. 5th straight day of losses for the stock. Volumes are the highest since May of last year. We'll have 13 lakh shares that have been traded already, 20-day average of just 2 lakh shares, and the stock is now trading at its 200-day moving average, a very important level of 1,093, and it's already below the other key moving averages. And from its 52-week high, which was close to 1,500 rupees, the stock has corrected almost 25% from those levels. And lastly, a segment that has not participated in this recovery is the real estate stocks. Well, Signature Global, Prestige Estates, Godrej Properties, all of them still trading 3 to 5% lower, and significant volumes as well. With Signature Global almost 3x of its 20-day average, Prestige Estates also 3x its 20-day average, Godrej Properties almost 4x its 20-day average. So significant volumes. Real estate is one sector that continues to remain under pressure despite the market recovery.
All right, thanks very much for that, Hormuz. Rahul Veera is with us, Fund Manager, Equity Investments, Nippon India AIF. Rahul, good to have you with us here. Good afternoon. Thanks very much for joining in. You know, the last bit, which is real estate as a pack, I mean, it's been the underperforming space of 2025. Just, I mean, point to point, in the 1 year period. Of course, before that, it had a couple of years, a great run. Where does it leave us, Rahul? You think in this space as well, prices are off 30-40% from their highs, depending on what you look at. Prices are attractive, or you think one needs to be careful?
Yeah, one needs to still trade cautiously in these names. If you see as a valuation metric, right, percentage of NAV, usually these stocks were trading at 60 to 80% of NAV prices on a normal cycle. In the last 3 or 4 years, when the market cycles or the wealth effect was very good, these were trading at 120%. So this kind of an offbeat valuations was a little bit too expensive for us to look at the sector. We believe still 1 or 2 years we are still away, even though EMI, rate cut cycle plus your affordability index will see some kind of an uptick there. But again, on the luxury end, we'll see some kind of a pressure there. So again, real estate stocks on a broader basis is still a avoid for us.
Okay. Hi, Rahul. Good afternoon. Good to see you, Ben. First time we're speaking this year. Wishing you a cracker ahead. Rahul, if I'm not mistaken, the fund is approximately, 3,500 crores or thereabouts. You could correct me if I'm off the mark. But give us a breakdown, actually, because you'll do both equity as well as debt. So tell us, what is the mix right now? And also, how much of cash are you sitting on? Because some are saying they're sitting on cash. They believe there's further pain in the markets. And that time, they'll be buyers.
Right. Yeah. So you're broadly correct. We are managing close to 3,300 crores of AUM as of now in the AIF space, and plus the other is in the PMS format. In terms of cash, we are closer to double-digit cash in our portfolio as of now.
Okay. And the split between the two, the mix, I think it is 70-30 normally at extremes. Equity and
so as of now, the equity is 88%, 12% cash.
All right. 88% and 12% cash. Got that. Rahul, I just was looking at the recent entries that you all made, and one large trade that stood out was a hotel company, the Taj GVK deal. If I'm not mistaken, I think it's this fund itself, the Nippon India AIF, that was a buyer. 10-20 lakh shares, I think, is what you all picked up. Tell us about this particular investment, and do you like the theme? Because, the ARRs were moving up and occupancies were moving out. Then one believed one of the two will have to give. That didn't happen. So your take.
Yeah, sure. So at an industry level, right, I'll speak at the industry level, even RevPAR, as you rightly mentioned, are up by 15%, even on a high base of last year. So your occupancies at the industry level is 64-65%, which continues to improve as of now. Even though the room addition is very high, we're still seeing the RevPARs to continue in the positive direction on a high base. We believe the valuations for a lot of these names, right, will have to be a little bit selective there. Wherever you are able to find a bottom-up idea in the sector, you'll have to pick up those. Hence, our view is that some of the names can do really well over the next 1 to 2 years.
Interesting. Explains why, in fact, one of those companies probably in your portfolio from this space, Taj GVK, has valuation comfort. And this block, I think, was a bit of an overhang of the stock. Got that. Let's talk about some of these new age themes. Paytm, that's a stock I think I got in early. Delivery has been actually a bit of an underperformer. Do you continue to remain positive on these names? Paytm, I think it would be up 70-80% from the time you started entering the stock. And delivery actually has been a relative underperformer. So how do you approach both of them?
Right. You're absolutely correct. So we've been entering the overall platform space since last 1 year when there was extreme pessimism or the negativity around the stocks. We saw the regulatory overhang in some of the names lasting for too long. And the management was correcting the strategy in terms of their cost base, in terms of their regulatory approvals. They were broadly in line. Hence, we started taking a call on some of the names that we were discussing. Other than that, some of the other platform names also we are positive. We believe they are the industry leaders in their respective spaces.
Got that. 100 points now, by the way. Good to see, right? Triple-digit gains. Otherwise, it's been a story of triple-digit losses. 100, 200. Take your pick, at least for the last 5-6 trading sessions. So 25,800 nearly now on the index as things stand right now. The low, by the way, today has been made at about 25,473. And let me just see if the Nifty Bank, which of course has been much stronger, it didn't fall as much as the Nifty did. Nifty Bank is also up about 1/3%. That's about 180 odd points. The broader market seen a fair bit of pain. Small cap index, though, is still down 0.5%. But it's also recovered a lot from the day's lowest point. And maybe just a quick look at the mid-cap index as well. Mid-cap index has come back into the green. So here as well is a big, not a green candle, but a candle nevertheless from where the lows made far, far away from where we are at right now. Rahul, you have Edelweiss Financial Services as part of your portfolio, right?
Yes.
The alternates businesses coming to the any timelines on that one? That was the trigger being watched out for.
So as per the presentation by the management, which has been uploaded on the exchanges, they have given a timeline of April 2026. So that is where we expect them to come.
Is that a big part of it? Why you own Edelweiss?
So approximately 30-35% of the valuation is driven by the EEE business from that company.
I see. Okay. Now, Reliance is the other one, right? Is the top, number one holding for you. Again, here there are a bunch of triggers, etc. What's the just run us through your thinking here across various businesses.
Sure. So now SOTP basis, right? There are 7 lakh crores for retail if you consider the valuation. Plus OMC, your GRMs are at close to $6 to $8 on an average, where they are increasing the GRMs consistently. Plus all the new themes, investments, if you do the approximate valuation that you give to them at a book value, or probably some of them new age businesses that they're investing, we see decent upside risk reward on this at this point of time now.
Okay, all right, Rahul, thanks a lot for joining in, giving us the themes that you like. Wishing you all the best, and we catch up soon as the course of the year does progress. By the way, Hormuz mentioned a few stocks on the broader markets. And some of them are really buzzing. JTL, that's a rank underperformer. It's actually locked circuit up. And volumes are very high. Wondering whether we're going to get some names coming in the large trades today, but that's one stock that I'm looking at. IFCI, I'm not too sure about how much of holding they have in NSE in terms of shares. Normally there's that debate. You compare IFCI's holdings in NSE with their market cap and the likes. I'm not too sure about how much they still have, but that stock is up 13%. Jaiswal Nico, a stock that's doubled in the last 1 year. We had explained the stock at around 45 rupees or thereabouts. It went to 90 rupees, it corrected around 80 rupees. But that's perked up a little bit as well. And Raj Ratan Wires, another stock, last week I saw the stock at one point of time was down 5-8% as well. Today, in fact, the stock has suddenly seen a bit of a surge, particularly in the last 1 hour or so. But I think Nimesh is ready. Nimesh is with us. He's here to take us through Deep Street Trader. Nimesh, what are you picking up? The shorts are running for cover and the bulls are thanking Sergio.
Well, Nigel, this is exactly what we've been explaining, you've been highlighting as well in your links, that around 0.64, 0.6, 0.65, market tends to see a bit of a pullback. And that's exactly what's played out today. A sharp short covering rally, and that's led to a big surge. So intraday, we've seen almost a 300-point move in the Nifty, largely on short covering. Having said that, there's a bit of recovery in the broader markets as well. And the extremely short positions by the FIs in the Nifty, the PCR were all indicating that a bounce was on the cards, and that's what it is. It's a pure bounce back from an extremely oversold levels. Thankfully, the flows are not that bad or that negative in today's market. So small buying is what I understand from larger FIs as well in today's market. I guess from a technical point of view, 25,450 is a level to watch on the downside. That's a crucial support level. If that gets taken out, then maybe you'll see further panic selling in broader markets and in the Nifty. So that's hopefully that holds on at least in the very near term. Having said that, given the fall we saw last week, the sentiment is very, very weak. The positions are quite light. And I don't think there is enough courage for HNIs and retail investors to buy. Over the weekend, I spoke to a lot of investors, and they all seem to be a bit dejected given the fall we saw last week. So a short covering pullback rally is what you're seeing right now, but doesn't look like the sentiment is quite strong in the broader markets.
Indeed, we're still on thin ice, actually. It will still be a little bit jittery. But what about individual stocks, Nimesh? What are you picking up?
Well, some stocks where there's a bit of flow or some bit of reaction. So SBI Life stands out in today's market. It's gained 1%. There is buying interest, is what I understand from larger FIs. And also there was a Morgan Stanley tactical buy on SBI Life today morning. And they expect a very strong Q3. And hence you've seen a bit of an up move in SBI Life today. So that's the first name. The second stock is ICICI Bank. Over the last few days, there seems to be a flow back into ICICI Bank from larger FIs. So there is a bit of churn happening within the private banks, and money is moving back to ICICI Bank. The results are on 17, but beyond results, I guess any clarity on Sandeep Bakshi will be a big trigger to watch out for. So that's a trigger, and maybe that's the reason why you're seeing a bit of uptake in ICICI Bank in terms of flows. And the last one is Yatharth Hospital. For the last many days, there is a constant feedback of selling pressure from larger FIs in Yatharth. The stock has corrected from the recent highs, but still the supply from larger institutions continue in Yatharth hospitals.
Okay, all right, Nimesh, thanks a lot for that. And by the way, we have some news flow that's actually trickling in with regard to JTL. The stock was as is up close to 18-19% or thereabouts, and now what's hitting the exchanges, which my ticker team just alerts us, is that there's a significant order win is what they're talking about from the Punjab State Transmission Corporation Limited for the manufacture, fabrication and galvanization of a 220 kV transmission tower material and substation structures. However, I couldn't come across the value of this particular order, but going by the wordings, it appears it's pretty large. The stock was already up, and now that order has hit the exchanges as well. Slip into a short break, come back, we'll continue our focus on markets. We'll also get in our technical experts. Welcome back. Well, Mitesh Thakkar is back with us. Mitesh, pretty okay trading session as we discussed earlier, but you've got a couple of trading ideas. Help us out with them.
BTST on SBI, the stop at about 1,006 for targets of 1,030. And Laurus Labs in a recovering market is remaining weak. So we'll take an activity there with the stop at 1,054 for targets of around 1,025.
Got it. Okay. All right. Thanks a lot for that, Mitesh. But, there are plenty of stocks that are moving around, and we've been analyzing it through the day. But Vivek joins us now to give us a nice roundup of all those stocks that that are buzzing on the back of news. Vivek, take it away.
Well, that's right. We've taken 3 stocks on the radar today, stocks that are buzzing on the back of news flow. Some relief coming in. First on the list is BSE, quite a sharp up move. Important comments coming in from SEBI chairman where they said that no action or no change in derivatives market, at least for the time being. And along with that, some positive commentary coming in terms of the NSE IPO, giving a sentiment positive as well. The other stock on the radar is Manappuram. The company has gone ahead and denied the report of another agency that said that RBI has raised concerns with respect to the Bain Capital deal. They say the report has been denied, factually incorrect as well as speculative in nature. And the last stock on the radar is Shakti Pumps. The company went ahead and told the exchanges that they've received orders worth over 650 crore from the Karnataka Renewable Energy Development Authority. Remember, the order book at the end of Q2 was 1,300 crores, and the company has announced orders worth almost 1,900 crore just in the last month. So positive news flow coming in for these names.
Oh, thanks a lot for that, Vivek. And Shakti, yes, that one's really showing some strength, up close to around 5% as we speak. But the frontline names, there are a few stocks that are really bouncing back. Reliance Industries is one that we pointed out even last week. We said the bulls need to fight back. Then Reliance needs to defend that 200 DMA. It's done it quite well, and it's moving now with some strength. Let's see whether or not it can get to the recent peak. And Asian Paints as well is the worst in the price. Is that under ownership theme going to play out here? That one as well at the day's high. Amrish Palika, independent market expert, joins us on the show. Hi, Amrish. Let's talk about Asian Paints first up. You think it'll paint a greener color this year? It's said to give up its underperformance, or would you stay away? There's too much of uncertainty.
No, not at all. In fact, I've been a buyer in Asian Paints for a while. And I think what's going in favor of Asian Paints right now is one, 2025, we saw a major underperformance from Asian Paints because of the possible competition. And now we are seeing that the competition is not really eating much into Asian Paints market share. So that's one positive. And number two, as far as the major input is concerned, that depends on oil. And with whatever has happened in Venezuela, I think should keep the oil prices more or less stable. So I think that's the other positive which is there for Asian Paints. So I think 2026, we should see Asian Paints outperforming. I'll not be surprised if we see levels of about 3,400 plus.
Got it. All right.
Right. Amrish, run us through your pick of the day, which is Keynes, I believe, right?
Yeah.
Again, a stock which has quoted some controversy recently.
Right.
What's the call?
That's a contrarian call again on Keynes. It's an integrated electronics manufacturing company, and they supply to multiple industry verticals such as automotive, aerospace and defense, industrial, railways, medical, and IT IoT. And they have around 500 plus customers, including MNCs across 30 countries, and diversified into OSAT, which means outsourced semiconductor assembly and test. And the pilot plant is already operational. They have about 22 advanced manufacturing and design facilities. 3 of them are overseas. And the customer concentration risk is also decently low. And like you rightly said, the stock had corrected well post the recent research report, questioning its accounting policies as well as related party transactions. Post that, we have seen a major correction, but I expect the management to give clarity during the Q3 earnings call. On the positive side, I would say recently they have signed a definitive agreement with the CNSQ for a JV for sovereign Indian post-quantum semiconductor. So this, I think, is positive. In Q2, EBITDA margins had increased to about 16.3% due to richer product mix and higher value add. And the order book position also is quite robust at about 8,099 crores last quarter. So I'm expecting an EPS of 28, for FY28 of 165. So the target price is about 5,000.
Okay. All right. Got that. Amrish, request you to stay with us. You're positive on Keynes. You've been a buyer at Asian Paints. We'll discuss more stocks with Amrish for the time being. We'll take a short break. More market talk lined up on the other side.
$111 points and counting, 25,800 for the Nifty, and it's the IT stocks which have done well so far. TCS is in focus ahead of earnings, as is HCL Tech. In fact, Rima's moved to the TCS headquarters to tell us what the street is expecting this time around. Rima, stock's seen a massive recovery from the lows, just the way the market has. All right, we'll just try and go across to Rima in just a bit. Meanwhile, I remember Rahul at the start of the show was saying that he likes Reliance and he likes Bharti Airtel, two of the stock picks that he had given. And Bharti Airtel, as on Q, has moved higher. It's currently about 1% higher. And we're also seeing some traction on Jindal Stainless. So the metal stocks which have been doing well, but broader market, Jindal Stainless is one which has spiked. GAIL is the other one which too has moved higher. Meanwhile, we do have Amrish Balika joining us as well. Amrish, in a market like this, which has been fairly volatile and grossly oversold until noon today, was there any idea that you liked and you picked?
In fact, the one which I just suggested, Keynes Technology, that's one stock which I've been positive on, especially after the sort of a correction which I've seen. I think most of the bad news is already priced in. And possibly once we have clarification from the management post the earnings, I think we should see the upward movement in that stock.
Lemon Tree after the deal that was made?
Lemon Tree, I think this deal is quite positive for the company because clearly it is going towards being asset light, and this would really help in that form. So I think we should see an upside from here, maybe of about 15 to 18% again over the next 6 to 8 months.
15 to 18% over the next 6 to 8 months. What about BSE and GMR Power? BSE is zooming now, up around 5%, and GMR Power, when we started the show, it was about 6% higher. Now it's moved about 9%. So there is some traction. Do you have a view on either of them?
BSE, I think it's a rub off one, whatever clarification has come now. And number two, because of the possible NSE IPO. And generally, whenever such large IPOs are in the offing, the stocks in the same sector do really see a decent move. And there are basically just two stocks in this, MCX and BSE. So I think both of them should see some more upside from here. Assuming that the markets hold on, then we should see a decent upside from there.
All right, we take that point. Thank you so much, Amrish, for joining in. What we'll do is we'll take your leave. Actually, don't go anywhere, though. 3:30 onwards at Markets Forward, we will hear Amrish's view on a whole host of stocks. Let's go back to Rima now. Rima, TCS, ahead of numbers, the stocks moved to the high point of trade. What's the street working with?
So let me start with TCS, where we're expecting a fairly lackluster, muted sort of a quarter. Constant currency revenue growth seen up 0.3%, 0.5%, margins flat at 25.2%, a modest 5-6% increase in the company's profitability, the bottom line, PAT. But what the street will watch is the body language, because the company's aspiration is to become the world's largest AI-led technology services, and they're backing it. They've made investments in data center, they've been aggressive in terms of the acquisitions, and for the first time in the December analyst meet, the company even quantified the AI revenues, $1.5 billion, growing faster than the company average, and accounting for 5% of the overall top line. So that's one. Secondly, will the company be able to achieve its guidance of FY26 international revenues being higher than last year? Ambit thinks it's going to be a bit challenging. And thirdly, will there be any exceptional items, one-time hit to the company's profitability on account of the $194 million payout due to the IP infringement case or the employee restructuring? Now, when it comes to HCL Tech, we're actually expecting a very strong quarter. Dollar revenue growth is seen up constant at 2.7%, constant currency revenue growth closer to 3%. But generally, Q3 is a stronger quarter for HCL Tech on account of its products business, where seasonally the company does well, and it's also higher margins. So margins are going to inch up for the company to 18.3%, and this is despite a wage hike impact, which could hurt the margins at 70 to 80 basis points. Now, with respect to the overall guidance, now HCL Tech has guided for 3 to 5%, but analysts believe the company may narrow it, which means raise the lower end. So maybe 3.5 to 5% or 4 to 5%. Margins will remain unchanged. Two parts to watch. One, the ramp up of the AI revenues. In Q2, they had about $100 million of advanced AI. What does that number stand at? And two, again, any employee restructuring related costs that the company will undertake.
Okay, all right, Rima, thanks a lot for that. The stock clearly excited getting into the numbers. Let's see whether or not they deliver what the street is sniffing. But the markets, what a volatile day. We recovered closer on 300 points from the lows of the day. Fired up by Sergio Gore's comments that potentially there could be a deal in the works. It may not be announced soon, but at least giving some hope. What did well? Metals and metal-related names. Coal India, Tata Steel, both of them bursting away 2.5 to 3.5% higher. Under-owned Asian Paints. Is it going to paint a better color this year? Well, that stock was up 2.5%. From the Ferris pack, Hindalco as well did bounce back. And Trent, after getting hammered out of shape and down close to around 50% or half of what it was at its peak, that as well ended in the green. TCS comes out with its numbers. Infosys was under the weather. That was down close to 100%. And big boy Reliance Industries as well technically did protect some lower levels. From the broader market, stocks that did well were JTL, Audubon coming in there, IFCI potentially having some stake in NSE. That stock was up. The silver ETFs did well because silver hit a fresh all-time high. And copper as well hit an all-time high. So you had Hindustan Copper as well that did do well. ADR reacting to its numbers was up close to around 4%. And Hindustan Zinc participating in the big uptick that we saw, Mangala.
All those stocks did well, Nigel. You know, the Nifty Bank was the star of the show, up nearly 700 points from the lows, along with the Nifty as well. But one pack that really stood out in terms of a decline was the real estate pack, because Signature's warning on the guidance, on not meeting their guidance, took not only Signature Global lower by about 6.5%, but all the other realty stocks, be it, you know, something like an Oberoi Realty, or if you look at Prestige Estates or Godrej Properties or Lodha Developers, all of them were notable underperformers in today's trading session. By and large, the mid-cap index ended with a flattish sort of move, with more stocks declining than the number of stocks which were advancing. But it was a lot better than the picture that the market showed at noon. With that, we'll wrap up on this edition of Closing Bell. You don't go anywhere. Markets Forward comes up next.